Hey everybody, Jay Young here, and this Jay Young show. It's end of the year, end of 2025. Man, we've had some great times this year. It's going to be a blast. We're going to end it up with the best interview in the business. Mac Stockdale, welcome to the Jay Young Show.
Jay, thank you very much for having me. It's great to be here.
Absolutely. Mac comes with a big, long history of trading commodities, derivatives, oil and gas. We're going to talk all about this and let you know more about it. But first, let's kind of go into the. Let's first go into what happened during Christmas. Where are you located right now?
I'm over in Houston.
Houston, okay.
So Houston, yep. And much to my wife's chagrin, she's from Europe, and so she misses her white Christmases. So we had a 75-degree Christmas over here with my mother. Flew her from out east, and it was a very special one.
Wow.
So, how about you?
That's great. I had suntan lotion on the day before Christmas. I mean, because I played golf and I did. I mean, I was like burning, and I'm like, wow, I need to put on some suntan lotion. So I had some suntan lotion, and because it was just great weather, just great. I mean, 8 degrees, great weather, and then it got a little chilly yesterday. I mean, we could tell the temperature was really dropping last night. So that's maybe we'll have some form of colder weather, if you will. So it's good. It's good. All right. Well, you've spent your career helping companies navigate volatile markets. And I know what we're going to call that hedging, and what hedging is and what it's all about. But you spent over a decade at ABN AMRO Bank, leading commodity and global derivative sales, working closely with companies to manage complex price risk. In 21, you founded Quanta in Houston with a simple but powerful mission: make energy hedging easier, clearer, and more accessible for U.S. oil and gas producers. Today, you help E&P companies manage hedge programs with modern technology instead of spreadsheets and guesswork. So welcome to the show, Mac. I look forward to hearing your story about what it is, and how did you first get into this? How did this commodities, and I think about Trading Places, Eddie Murphy. I think about commodities and it's being so up and down, and Mortimer and all those kind of people. Tell me something about how you started. How did you get started in this business?
Yeah, sure. Mortimer was an inspiration of mine, of course, as everyone in Wall Street was, right? Now, I took a very circuitous path to oil and gas, Jay. I grew up in Washington, D.C., not really knowing anything about Washington oil and gas. Don't knock me, though. Neither of my parents were politicians or lawyers. My mother was a school teacher. My father was in journalism. And I went to school in the Northeast in Brown and studied physics. But when I graduated, I had a degree in physics, but I also knew how to build houses. So that's how I worked my way through school as a carpenter.
Wow.
So instead of going and using my physics degree to my parents' chagrin, I opened up my own house building business, residential construction around Washington, D.C. So that was my first company, a long time ago. And then after several years of doing that, sold that business, used the proceeds to travel around the world like any young man probably would, foolishly. And then when I ran out of money, I decided to try my hand at finance, try my hand at Wall Street. But no Wall Street banks would take me. So I ended up at a Dutch bank called ABN AMRO for a 4-month internship as a quantitative analyst, evaluating credit default swaps in their dealing room. And that was my first taste of finance, getting out of school. And it was a ton of fun. I worked my way up through the trading organization, trading mostly interest rates, but got into energy and really enjoyed just the complex landscape of energy derivatives. Had a lot of fun there.
So walk me through. All right, before we get down the road a little bit, I mean, you lost me with a couple of huge big words right there. Okay, so I don't want to go back and make sure that we don't go too far, because I don't want to lose all my people here, because they're sitting there listening, going, all right, so quantitative and derivatives, and you're talking about subprimes, and tell me what was a daily look like? What did you go walk in the office and I couldn't even spell these words, much less even try to trade them or do whatever. What does this mean? What are you trying to do here?
Yeah, sure. I mean, as a quantitative analyst, you're studying markets and you're putting together models to try to approximate market behavior. So as a
How do you do
quantitative
that? What
trader,
what happens there? What are you doing?
well, you're building specific models to, just seeing maybe one model or two model, but which one closely, follows the market trends, the
Uh huh.
market sentiment, how it's behaving, why it's behaving a specific way, and then you analyze those patterns, and then you develop strategies on top of it to see if you can generate alpha.
So you're talking about different commodities that are across the board. Are you looking at five commodities at that time in your
Oh,
career? Are you looking at all of them, or are you looking at? I'm not sure how many all of them are, but what were you?
oh, a ton.
What's
Yeah,
that?
so those days we were mostly doing fuel oil.
Okay.
So over in Europe, they're mostly producer hedging in
Uh
North
huh.
America, and in Europe it's mostly on the consumption side. So kerosene, jet fuel, diesel. Those were some of the mostly the markets I was following.
Okay. So you're looking for trends, or you're looking to say, okay, this kerosene or crude oil or is the consumption. You're looking at how much consumption, supply and demand, which I talk a lot about in different radio interviews about, supply and demand. That's the reason why prices go up and down. It was because of supply and demand. And then we're also going to talk about, okay, well, it's only not only supply and demand, but it's also about, you know, uh, what's going to happen to the markets. What do you feel like, or whatever? I mean, there's a big risk here, right? Is that true, or what? So you're
Sure.
looking at all these different. When you say quantitative, how many different ways can a market go up and down, and why?
That's a great question. We're going to need a bigger boat for that one, Jay.
Okay, all right. Well, maybe just dumb it
The
down for us, guys that just kind of want to know what's the basics behind it.
Yeah, well, maybe one of the most important ways I can talk about is who I was doing it for. And
Okay.
so our customers were specifically people who were trying to mitigate the risk to these underlying prices. So say if it was a shipping company, 25 to 30% of their capex was fuel costs. So they would say, "Hey Mac, I have a problem. Rising fuel costs are just crushing me. And what are some ways that I can mitigate this risk?" And I said, "Well, one way is to go into a swap, or you swap future cash flows for a fixed exchange of cash flows, or maybe you can buy a call, and
Mm-hmm.
that's a derivative that's going to pay out when prices rise."
Mm-hmm.
So these were all ways that I was helping companies manage the price risk associated with their businesses.
Okay. I remember one of the biggest, and I have my Series 3 and 7. I had it. I don't anymore, but I remember back in the day in the 80s when I got my Series 7 and 3 and 63. We talked about commodities and talked about hedging and briefly. I mean, just skim the surface. But it was kind of like the farmer, who said, "Okay, well, I'm going to put together all these soybeans, and I'm going to deliver these soybeans in 6 months, but I'm going to spend all this money in the meantime to make the soybeans. So
Yep.
I want to make sure that I get a certain price for it. So if it's $5 a bushel, and I have no is soybeans in bushels. I have no idea what the price. It could be 150, but let's just say if it's like, okay, I'm going to spend $2 and I need to make five to make my profit margins for my business, then that's what I want. And so you could help. What you're saying is you could help people like me or like my farmer deliver that $5 price, right?
That's exactly right. And in
Okay.
fact, you touched on one of the most ancient forms of derivatives. In agriculture, it was ancient Mesopotamia. It was the farmer who was selling their grain forward to bakers who
Yeah.
were buying their grain forward. So those are the earliest forms of derivatives, and their derivatives are actually thousands of years old. They predate a lot of the modern economy, but they were as simple as that. And now we have a lot more complex ways of exchanging that risk, modern exchanges, of course.
Mm-hmm.
And there's the over-the-counter market where a lot of the companies actually do their hedging these days. But
Okay.
but but you touched on one of the most basic and one of the oldest ones in the
Yeah.
world.
Yeah. I remember too. There was talking about a tanker full of oil leaving, wherever, Iran, Iraq, and it would be on the road. So you'd pay, $55 a barrel, $60 a barrel for it. But you wanted to make sure that when it landed, 2 months later or whatever, a month later, whenever, that you received 55. So you could
Yep.
hedge your bets. How could you do that? How much would it cost me to make sure that I get $55? Let's say today I buy a tanker of oil, and it's 100,000 barrels, and I say, okay, all right, I call you up, Mac, you're at Quanta, and I say, Mac, how can I make sure that I receive $55? What do I have to do? What happens then?
Right. So there are two mechanisms that global companies really use these days. One is exchange traded hedging. So that's the way more of the, we call it the majors and call it a lot of the merchant traders access exchanges directly, and they're on the exchange and they're buying, selling other futures or options, and at some point in the future, and those are very, very specific, highly regulated instruments to manage price risk. So companies like Shell will use that. Companies like Vitol will use that, and those are for the big boys.
Mm-hmm.
The other type of hedging, and the hedging that my company helps manage, that's the over-the-counter derivative markets, and most of that is done through intermediaries, and those intermediaries are usually banks. So for the oil and gas industry, it's usually, say, if you're an oil and gas producer and you're interested in managing your price risk, or you're a refiner and you're putting it on a barge, chances are you have a lending facility with various banks, maybe a couple of banks, and they're giving you a credit line to hedge.
Mm-hmm.
Now that helps with actually two reasons. One, you can tailor the hedges more specifically. In your example, you can get very, very specific about the delivery days of when that oil and gas is being delivered. And number two, it can be very, very precise around the kind of instrument you want. Now, it can also help with one other ways. You don't have to post cash or treasuries like you do in exchange. So those big multinational companies like Shell and Vitol, they're doling out, sometimes billions of dollars, in margin every single day. You don't need to do that in the bilateral market. So
Okay.
the banks take care of all that for you as an intermediary. So you pay through that through a credit margin. So when you asked initially, what's it going to cost me? Well, if you have a loan with a bank, like a lot of the oil and gas companies in the U.S. do, it only costs you a credit spread on each transaction,
Okay.
and that's how the business makes money.
Okay. Because we want to make sure that we're not stuck with $20 oil, or if you buy it if I sell it in the United States, but it's not here yet, and I want to make sure I guarantee $55 a barrel. It may cost me a little bit. Will it cost me money? Probably
Yeah,
cost me a
sure.
little bit of money. Not $2-3 or something, or
Yeah, it's gonna cost you a bit out spread, and that depends on how far out in the curve you are,
yeah,
and that depends on what size of the contract you're doing, who you're doing it with. So there is going to be a cost associated with that,
yeah, okay. But if I went to
but but
50,
but, but it's gonna vary a lot depending
yeah,
on what kind of business you're doing and who your counterparties are.
yeah. And I guess if I wanted to say, okay, well, I'll forget about that. I want to guarantee $50. Then you take that all day long, because it's like, well, that's it's selling it right at 56, 57 right now. So that's a good deal for you. I mean, a good deal, not for you, but for us, that I'm guaranteeing at least $50, because it'd have to drop a lot. So, and you wouldn't have to pay that much for it. I'm assuming you wouldn't have to pay as much for a 50 than you would like a 55, because it's, even if it's in the same month, 2-3 months from now, a 50 call or a 55 call would be a lot less. A 50 call would be a lot less money than a 55, because it's closer to that strike price or your commodity price, I guess, right?
Yeah, so if you were dealing with out of the money strikes, so a $50 put would be appropriate for something like that. Derivatives are always priced at the money. So
Yeah.
whatever the market is pricing it, that's what you're going to pay uh, or buy or sell it for. But you can always buy an option, either a call or a put, that's out of the money. That's away from that at the money strike. And
Yeah.
that's where hedging gets really fun, Jay. That's where the math comes in. That's where it gets fun.
Yeah. Yeah. A call wants you want the price to go up, and a put you want the price to go down. I remember that much, and I made
You
money
got
one
it.
time, but other than that, I think I lost money every time on commodities. And,
You aced your Series 7.
man,
I can tell just by that comment, Jay.
yeah. Well, I tell you, I mean, it's like, and we bought some options on some stocks, and we kept going out further and further and further, and we just didn't go out far enough. But it's interesting, and it's a gamble. I mean, it's literally a gamble, and you could lose all your money, or you can make it big. I mean, it's something, but that's not what you're doing. You're not trying to risk capital and say, okay, yeah, let's take a big risk. Do we think oil's going up? Do we think it's going down? And if it's, you buy calls or puts either way. But you're saying, what you're doing in your business, Quanta, you want to hedge for oil and gas company. What's your typical client look like?
Yeah, so our typical client company is a U.S. oil and gas company. They have a loan with maybe one or a series of U.S. banks that are financing their operations,
Okay.
and they're basically hedging forward and to protect their production and to protect their loan. So 100% of our customers have what's called a reserve-based lending credit facility,
Mm-hmm.
where syndicated banks come together and say, here, we're going to extend you, say $100 million, to drill these series of wells. And the banks say to them, well, to ensure that you always maintain a specific revenue, basically to make sure you always pay us back on the loan,
Right. Right.
you're going to need a hedge.
Okay.
I mean, you're going to need a hedge for maybe 1 year, 2 years, 3 years out, and that's going to protect your price risk, and that's going to ensure we always get our money back
Mm.
as the bank. So we got oil and gas guys in the Permian. We got gas guys in the Rockies. We've got offshore producers. We've got Eagle Ford. We got companies about in every single basin. Oil and gas guys. But the main thing that runs through with all of them is they all have this RBL facility that where they hedge through that cross collateralizes their derivative line.
Wow. How does this change how businesses do, or how a business performs, or I guess, does it change how companies look at their 2026 budgets and say, okay, well, we do or don't do this because of hedging and because of commodity risk, or how does that normally work?
Oh, it changes it massively, Jay.
Yeah.
And I mean, if you can think of a company, an oil and gas company, without hedging, I mean, an oil and gas company is kind of like it's a asset manager attached to a construction company, basically. And that's kind of how I think of an E&P.
Mm-hmm.
So you're always constantly re-upping how you're thinking about how that construction company is going to be operating over the next year or two. If you don't know what prices are going to be over the next horizon, it's very, very difficult to plan how that construction company is going to operate. And so that's really what hedging allows you to do. It allows you to forecast prices a little bit better, to smooth out your cash flows, and it allows you to really plan a lot more effectively, because nothing moves the needle like hedging.
Yeah.
And it's really the biggest financial performer of a
Wow.
lot of these companies.
What do you mean by
So
that?
it
What do you
becomes
mean
a
by
critical
that?
part of the companies.
Yeah. What do you mean by that? It moves the needle or whatever. What did you just say? What you said?
Yeah,
There's nothing like it besides hedging or something. Or let's say I spend
sure.
$100 million. Are you saying I'm borrowing $100 million? I've already got $100 million borrowed into this year, and I say, okay, hey, help me out next year. Help me out next year. I've got to pay interest. I got to pay $10 million in interest, and the one thing that I know we can't control and is commodities. We don't know what oil is going
Right.
to do. We don't know what gas is going to do. So if I say, okay, I've got $100 million borrowed, I got to pay $10 million in debt next year, $8 million, whatever, and help me with commodity risk. What would you say, or what would you suggest for me to do?
Sure. So say you're hedging today, I don't know, at $55, and so you're hedging 1 million barrels, and then and next year it drops $5. It goes right down to 50. Your mark to market is going to be $5 million, and just on that little tiny move. So I mean, that's a massive amount of money And say it also moves up $10. So now you're out of the money $10. These swings are huge. They're massive. So the mark to market on your book, which is off balance sheet, is going to probably outweigh your all the costs of your finance team. Yeah, you can fire everyone, you can slash G&A. Nothing is going to move the financial needle like your hedging program. And that's why it's so important to monitor, track, and evaluate performance at all times.
Oh,
Because this
wow.
really, really does move the financial outcomes of oil and gas companies like nothing else.
So if I produce 1,000,000 barrels of oil, I'm trying to get down this to the simple guys just so we can all understand. What if I'm producing 1,000,000 barrels a year? Let's say I'm producing 1,000,000 barrels a year. Is that about 3,000 barrels a day, something like that?
Yeah.
3,000 barrels a day, and then price goes from $55 to 50, just $5. That doesn't seem like a lot, does it?
Doesn't seem like a lot.
That's $5 million.
Yeah.
Wow, that's a lot. That's a lot of money. I didn't think
It's a
about
lot
it
of
like
money.
that. Yeah, I didn't think about it like that. So what? So what would you
And then,
suggest that I do to?
we've got guys producing 35, 40 a day.
Yeah, yeah,
And they, across all kinds of commodities. it could be NGLs, crude, gas.
yeah.
So the mark to market is getting into the hundreds of millions.
Right.
In 2020, the markets were in the billions.
Hmm.
This is huge, huge, huge money,
Right.
and they're not on exchanges. These are not amounts you're going to see anywhere. This is all private. And that's what makes this so important to keep track of, and why it really makes sense to put in a more performance system to really make sure you're doing a good job.
Yeah. Golly, that's a lot of money though. I mean, that's $5 million for just we're going to produce 1,000,000 barrels or 2,000,000 barrels. Yeah, I'm pretty sure King Operating next year will do about 2,000,000 barrels. So at 2,000,000 barrels at $5 a barrel, that's $10 million in lost revenues.
That's $10 million.
If
Yep.
if if price goes from 55 to
If
50, yeah.
if
If
yeah.
it goes up,
And of course, it could go the other way.
hell yeah, baby, let's go. No, just kidding. But sorry about my excitement there. But yeah, you're saying that if it does go from, I didn't really realize. I mean, I just kind of, and I see it, and I have revenue checks, and we've done revenue for years and years, and I'm just thinking, okay, man, you know what? 5,000,000 barrels, 2,000,000 barrels at $5. $10 million. That's a lot of money to leave out. But how much would it cost me to hedge? So if I said, okay, hey, I got a feeling. I don't know. Don't tell anybody, Mac, but I got a feeling that prices may go down $5 next year. I don't want them to, and I don't know if they will. But man, if they do, that's going to cost me $10 million. So ask how much. How can I? I don't give you a lot of money. I don't want to spend that much money trying to hedge it. But man, how can I spend? How can I spend some money saving my $10 million? 2,000,000 barrels. I think it's going to go down 5, or I'm afraid it's going to go down 5 or more. How much is it going to cost me to hedge? Is that a fair
You could
question?
also, instead of a swap, you could also do, say, a put. And instead of paying cash for the put, you could say you could defer the premiums on the put and spread them out over the course of the next, whatever horizon they're using to hedge with.
Yeah.
So if you're saying to say $50 is your break even rate, well, let's just say it is for the sake. Maybe it costs maybe maybe it costs a couple bucks for a put, something like that. Now you're only going to pay that on monthly installments on the future duration of that production. So you're not paying that, you're not paying the money for that option up front. That way you can also say, hey, if it goes up, the only money we lose is that premium for that underlying put. So you can actually capitalize when it goes up if you only have a hunch that
Yeah.
it's going to go down. There are different ways you could do this. The most appropriate way that we found companies
What's
can
a
do it
swap? You
is-
said that first. Okay, I'm sorry. I don't mean for you to go further, but I see you go
No, it's
so you're going really fast for me, and I don't have that much intelligence. So I'm trying to. No, I'm just kidding. But I'm just trying to make sure that I stay up here, and I'm thinking about the listeners and going, whoa, wait a minute. Okay, what's a swap? How much would a swap cost me?
So a swap is an exchange of floating cash flows, future floating cash flows for future future fixed cash flows. A little bit of a tongue twister there.
All right.
And
What
that
does that
is
mean?
supposed
What
to
does that
be that's supposed to be a zero cost instrument. So you're not going to pay any cash up front
Okay.
for a swap. So you're going to fix those cash flows out into the future for a specific price.
Hmm.
And then the difference is going to be whatever prevailing market price is going to be in the future. And then you'll exchange the cash flows basically at that future price at that future date. But on day zero, right now, you don't pay anything.
Okay.
That's
No
what
money
makes the
down.
swap a very powerful instrument.
I got no money down, and I'm
No
saving
money down.
if price goes down to 50. But if it
That's right.
lands at something, do I have to pay both ways or something? Is that how that
Yes.
works? Oh,
Oh yeah.
I was hoping you would say
So
no. But anyway,
so
okay.
so is it so it's something there's no free lunch in the markets,
All
unfortunately.
right. Well,
So the you're going to pay for it when at that future point when the market settles, and you'll pay the settlement price between whatever specified price you execute the deal now and wherever the market is then, multiplied by however many volumes, however many barrels or MMBTUs that you hedged.
okay.
And that's really the bread and butter of the industry. That's the most basic instrument is a swap.
Okay. The most basic is the swap. So what am
Yep.
am I going to buy some calls and sell some puts or buy, sell? What is it? What would you suggest? I'm afraid it's going to go down $5 or more in the
Yep.
next 3 months or next year, let's just say. So how
Sure.
much would it? So what would I put on here? Let's walk
Yeah.
through that real quick.
So depending on I'd also have to ask you a couple of questions. So
Okay.
I'd say, hey Jay, where are your break evens? What are you trying to do next year? Are you trying to achieve some free cash flow? Is it you're going for a specific EBITDA? Are we running really close, to your break evens right now? Is 50 a dangerous number? All these factors are going to be associated with the advice that we're going to give you on what to hedge and how to hedge it.
Hmm.
So,
Okay.
for instance, we've got plenty of guys who, some Permian guys who are riding real close. I mean, their break evens are like in the mid 50s, and we go, man, you got to hedge more.
Right.
I mean, you're way too close to the danger zone. And then we got plenty of guys, who are, break evens are maybe in the 40s, and we go, maybe you don't have to hedge quite as much,
Right.
right?
Right.
So it depends entirely what you're trying to achieve and where your risk tolerances are.
Okay.
And that will depend on what kind of advice that we can give you.
Yeah. It's not just a one size fit all. 2 million barrel.
No, it's very much not a one size fits all, and that's what's so interesting about the hedging world as opposed to the trading world. In the trading world, you are trading risk for profit, and
Okay.
it's very black and white. In the hedging world, you are mitigating a risk with financial derivatives. So you
Okay.
have this extra component that you're playing with, and those are your company targets. Those are your financial objectives. That's whatever you're trying to achieve as a company. That needs to be baked in to how you approach the hedge program as much as the market prices.
Mm-hmm. Okay. All right. That makes sense. I'm trying to think just making sure that that's a big number. I mean, and that's 2 million barrels. And there are some companies that produce 2 million barrels a day, not a year, a day,
Yeah,
every day. And that's a lot of money going back and forth. So I can see why there's some companies that do produce a tremendous amount of oil and gas and why they do hedge, because hedging it's like you're just making sure that, okay, if the price goes down, you're losing $5 on your revenue check, but you're gaining it back on the statement, I guess, on the hedging statement, because
that's
you
right.
did hedge and say, okay, yeah, I'm afraid it's going to go down. I remember one time I just felt like the oil was getting ready to go up, and so we bought a bunch of calls on oil, and I mean, it shot up over the weekend. Literally, it's like within a week, and I made $120,000 or something. And I'm like, man, this thing's unbelievable. This thing's, and then and
They
then
are incredibly powerful instruments.
yeah,
So what Warren Buffett called derivatives the weapons of mass destruction of the financial world.
right, right,
And they are very powerful, and used in the right ways, they can save your butt.
yeah,
Using the wrong ways, and they can sink you.
yeah,
So it's important to use them appropriately.
yeah, yeah. And I mean, I've done the same thing with my own personal money and thinking about oil prices are going up. There's no question. There's zero, none, absolutely 100%. It's going up and it goes down. It's like you never know. You just don't know. And so what hedging does is allows the yeah, and I'm assuming that majority of the banks that have RBLs, they want you to hedge. They don't want to
Oh
be
yeah,
stuck. I mean, they want their money, right? They want their money at a certain
absolutely.
price, and they don't want to sit here and go, oh, okay. Well, you say, well, I'm sorry. I mean, it was floating along. We were doing great until price went to, 30 or something, and then I remember a guy that the CEO of Athon. I went on a trip with him one time, and he said, I'm making more money right now off my hedging, but he's drilling a bunch of gas wells over in Louisiana. His name is Huddleston. Anyways, but he said, yeah, he's making more money right now off hedging than he is off commodity,
Yeah,
because gas prices were going so negative, and they had hedged obviously when price was $3 and it was at $1 or something or whatever. I mean, it was killing everybody, but he was making huge checks because he had put the floor in at 3 and said, hey, I'm staying at 3. I get paid at 3 regardless.
yep,
Whether or not this price goes to $2.50, whatever, however far it goes down, I'm getting paid at $3. I'm sure those are probably pretty expensive to put on or something, or I guess you're buying a put, right?
well, he probably put on swaps,
Yeah,
and it probably cost him nothing to do at the time,
yeah,
as long as he was doing it probably through the trading arm of his lenders.
right,
Now, so that's a very common situation to find yourself in, and the same situation that a lot of U.S. producers found themselves in 2020. I mean, the mark to market on their books in many
right.
cases, was more than the assets that they were supposed to be hedging.
Wow,
I
unbelievable.
mean, it was a crazy time to be in the market. But if you had hedged in 2018 and 19, you were probably in a pretty good spot. If you didn't, a lot of those companies didn't survive.
Yeah,
So over the last 5 to 6 years, hedging has become a more serious component, I'd
yeah,
say, of the upstream energy toolkit.
yeah,
And it's very, very, very difficult now to get a loan from any bank without incorporating some sort of hedging
right.
into your company.
Wow. Okay. All right. Interesting. That's interesting. I mean, it makes incredible sense, especially if it doesn't cost you a lot of money up front. If you're putting it
Yeah,
together because you want to make sure that you're protected, so the bank always feels good that they can get paid, because
that's right.
a lot of RBLs went out of the market in 18, 19, and 20 because they were losing money, and they just were like, okay, it's not worth it. We're out of here, and we're not going to loan money to oil and gas companies ever again. And they didn't know that. They didn't know that, hey, you know what? If we'd have hedged better or had a better hedging system in place, they could have.
That's right.
If they'd have met Mac Stockdale back then and put you in place, then they would have said, hey, we're good. Let's continue on with this oil and gas. But they haven't met you. They hadn't met Quanta yet, so they were like, yep, we're out. I know it's
That's
harder to get
right.
money. It's harder to get a lot of money. So, but anyway,
Well, the real issue though is over the past 5 years or so, companies have also lost a lot of money hedging,
mm,
and that's really where, because as a smaller producer, you're really at the mercy of the market. And if for instance, take crude for example, where it has a very semi-permanent backwardation to the curve, and there are multiple reasons for that: storage mechanics, volatility risk mechanics. But a lot of these guys have come to me over the last year or so and said, "Hey, Mac, it just seems like we're always losing money with our hedges." And even though we put on swaps or we put on, which was supposed to be, zero cost derivative instruments, just always feels like our hedge program is just out of control or we're losing money. And there's really no way to measure the performance.
mm-hmm,
And in fact, you'll get a kick out. One of the quotes from one of my customers. He said, "Mac, man, I got a million ways to measure the performance of a well. I don't have one way to measure the performance of my hedge program."
yeah,
That
yeah,
is that really bugs me
right,
because like you said, Jay, this is a lot of money at stake.
right,
So instead of looking backwards on how the mark to market is doing, how do you go forwards and saying how is my hedge program performing objectively?
right,
And that's a problem over the last year or so where I've really become really interested in digging in because it's an issue beyond just putting on the hedge and forget it. It's how do we actually ensure this is actually the right hedge at the right time, in the right place? And
Right.
that's become a very fun problem for us to solve.
Mm-hmm. I mean, if we'd have hedged back when oil was $80 a barrel, I don't know how much money that would have cost us, but if $75 or $80 a barrel, which wasn't 3 months ago, 6 months ago, oil was at 75 or dollars a barrel. Then I would be making money right now. I mean, I would be making $20,
A
so
lot of money.
I'd be making money on our hedges right now if I would have incorporated that, but I didn't. And we're not producing 2 million barrels a year. We're producing, I don't know where we're going to end up at the year, but it'll be about 1 million probably. But we've got some drilling rigs going up, and we're going to start drilling, and I'm hoping to do 2 million next year. But I mean, it makes a big difference. It makes a really big difference. So I can understand exactly where you're coming from, and what you're supposed to do, and what you're. I don't understand how I can lose money though. That's how. How do people lose money? Hedging.
Well, it is an interesting thing about hedging. If you are certainly losing money when it goes the other way, but the mark to market is supposed to be offset, of course, by your physical production. So if you're losing money on the hedge side, then you should be making money on the physical,
Right.
and then and then vice versa. So the issue that our customers came to us with is, well, it just always seems like we're kind of behind the curve here.
Yeah.
So we're
Yeah.
losing a lot of money, especially on our oil hedges. Not right now, but over the last couple of years since 2020, it's been negative a whole lot. So how can we fix this? And how can we build a better hedge program, basically? And that's where I got really interested in how other industries did it. So like you, Jay, I'm a big believer in a cross-industry innovation and learning. So I talked to my buddies over in the merchant traders and hedge fund managers and prop shop guys and how they thought about trading, how they thought about the industry. And what it came down to, and the term that I kept on hearing more and more and more was the answers can be found in algorithmic trading.
Hmm.
And algorithmic trading is a rules-based statistical way of finding entry points and exit points in financial markets to generate alpha. So using these techniques, and these are the same techniques that basically, all the big merchant traders are using these techniques to basically make a lot of money. Our theory was that you can stop losing a lot of money and build more performant hedge programs by following the same techniques that these companies have used to generate alpha for years with algorithmic trading. And that's what we're doing right now. And that's so. A passage in your book inspired me, by the way, when you were talking to your real estate buddy. I think if I'm remembering your book correctly, I think you're
Yeah.
maybe on the ski slopes.
Yeah.
And for anyone out there listening, by the way, the upside of oil and gas. If you haven't picked up a copy, pick up a copy. It'll inspire you.
There you go.
But
Thank you.
that's what I did to for other folks in other industries, and then I gained clues, and that's where I found the answers to build a more performant hedge program that frankly doesn't lose as much money.
Yeah. That's awesome. That's great. We want to hear more about that because I know that it is, and there's so much money at stake, especially when you're producing, 1 million barrels a year, 2 million, 3, whatever. You are just going blind, going.
Yeah.
I should say naked, but I don't know if I can say naked on the Jay Young show or not. But probably so. We probably said things like that before. But you're just kind of flying naked without a parachute or without anything else because you're just out there thinking, okay. I mean, I did say this that I wanted to go in and start drilling some natural gas prospects back about 6 months ago. I did say that because I said I feel like there's a better upside to natural gas than there is upside to oil. I feel like oil's going to either stay here or go down. If I'd have known it's going to go down to 55 or 58, whatever it is today, I would have definitely bought some hedges. But I think that's brilliant. I think it's really good. I think it's a great way to look at making sure that you save your clients money, make sure you save yourself money, and just making sure that, like I said, wasn't it just a short time ago that if we'd have put hedges in place at, $75 a barrel or whatever, you make money. So that is a good
Yeah.
way to do it. And I like that, and I appreciate you coming on the show and talking about this. What else? Is there anything else? Give me a little bit of advice. I got like 3 minutes. I've got a call at 3:00 my time on a client because it's tax day. It's 2-3 days before the end of the year, and I got people calling me left and right about these taxes, and I've got a couple of minutes, but I want you to finish up with a good advice. What if you were, and just what Jordan would always say, what would you tell your 18-year-old self? What would you do differently? Tell your 18-year-old self, what would you do? What would you do? Tell us, give us some advice.
Well, there's a fun saying we always used to have in the hedging floor. The best time to hedge was yesterday.
Yeah.
Right. So you're always behind the curve if you. But it's true, and the thing about hedging, it is so emotional, and so much money is at stake, and there's something that goes on in the human mind that makes us make irrational decisions. We tend to sell when prices are low and then buy when prices are high. And it doesn't matter what the asset class is, and equities, foreign exchange, commodities, energy is the same way. So by having a good system, you can avoid making those irrational emotional decisions and work with objective data instead of subjective feelings.
Yeah.
And the best hedge programs are built out of a good system. And that's in a nutshell where we're helping companies basically take the emotion out of hedging and build better systems to manage their risk.
That's great. I love that. That's really good information. And I apologize. I have to cut it kind of short, not too short, but a little short because I've got to jump on a call here real soon. But no, Mac, that is great. And we need to definitely talk and keep in touch because I know that the same thing is like you get so emotional and you think that prices are going to go nowhere but up. I'm the optimist in the room, obviously, and I think that it's going to go to, whatever. And if it doesn't, I have a lot of risk at stake, and I have a lot of clients' risk at stake as well, which we don't want that. We want, make sure that we can hedge and not cost us a lot of money, but hey, if it does go the other way, it's not like we're winning. You're not really winning if prices go down, because you're losing on the physical inventory side, but you're just making money on the hedging side, if you will. So I love that. That's great. Mac, have a great happy new year to you. And let's stay in touch. Let's get together first week in January so we can talk more about what you can do for King Operating. Does that sound good?
That sounds fantastic. Jay, thank you for having me on. Have a very happy new year and wishing you guys a lot of success in 2026. Looking forward to keeping in touch.
I appreciate that, Mac. Very, very thank you very much. Some of the stories that caught my attention over the past week. And, my wife loves it when I tell her stories. I look through and read all the newspapers and I tell her the highlights. She kind of loves that. So let's talk about that real quick. Because, there's a big deal right now is with Trump. And Trump talked to Putin. And after he talked to Putin, he's like, okay, let's call Mr. Zelensky over here about this peace deal, okay? Mm-hmm. Things seem to be going pretty even right now. So we may have some markets that are coming to light, and not really being hard, and commodity prices going down because of there's no more geopolitical risk. Yeah. If you take Zelensky and Putin out of the equation, so well, that was a really good story over the week. With this just now happening, some of the breaking news, if you will. Mm-hmm. But also I was reading about the guy that a lot of people feel like that a lot of these markets are overvalued. And what I mean by that is, the NVIDIA, the guy that started, and one of my good friends, Greg Littman out of New York, I know his dad, Tom, but Greg Littman did the subordinated debentures and the decline back in the mortgage-backed securities. And the guy that came up with that trade, he says, he's one of them, but said that he feels like NVIDIA and all this AI stuff is really blasting, is going way up too fast, and we may see some markets go down. So that was a big story that's going on right now.
Yeah, there's definitely been questions about are we seeing a bubble in some of those stocks? Is it gonna burst? So
and you could.
You never know.
Just think back.
Could it's been inflated.
Just think about all the different these tech stocks back. Mm-hmm. When was that? In the 90s or something?
Yeah.
I mean, people were making money just hand over fist really, really quick.
Yeah.
And I was doing that same thing. I put money into this deal and it's just boom, all of a sudden, and then boom, it all goes down.
Yeah.
You know, but they're seeing it. They're seeing that, which could hurt. And you know, Bridget Bardot, you know, one of the icons from way back. You know, she passed away, unfortunately.
Yeah,
hate to hear that.
Beautiful woman, and did a lot. She had a lot of great charities. She had some really amazing work she did in animal welfare. So, just an incredible woman, great legacy.
Yeah, yeah. Well, and too, when somebody is as beautiful as that and comes out and wants to be filmed, and back then too, I mean, it's like, you know, sex wasn't really a thing, and you didn't really show any cleavage or anything back then. And man, she really came across and took it to a new level.
Yeah, I think you remember that.
Yeah, well, not that I'm 91 years old, but yeah, she definitely.
No, she was gorgeous. I mean, she was a little before my time, but I had photos of her as a teenager.
Yeah.
I mean, she was an incredible icon, just a gorgeous individual and a beautiful human at that. You know, just a really amazing woman.
Her and Farrah Fawcett. I remember my buddy, he was allowed to put pictures or posters on his walls. My mom and dad would not allow that whatsoever. They're like, no.
So you had to go over to his house to.
I had to go over to his house. I saw the Farrah Fawcett. Yeah, I saw the Farrah. Oh my gosh, I couldn't believe it.
That was big for back then.
Man, it really was.
Not like today.
It really was. So, you know, I don't know about any other news that's really coming about. I mean, I know that here's one. Which police could issue citations on toll roads? Have you ever been on a toll road and you said, I wonder if this cop can pull me over?
Well, I wonder if
he's a Dallas policeman.
Yeah, I've wondered about that.
Yeah. And the answer is no. He cannot give you a ticket. It's right here in the Dallas Morning News.
Is that the tollway though? What about Sam Rayburn?
Tollway. Oh, that's the tollway.
They pull people over all the time on Sam Rayburn tollway.
Do they really? I wonder if they have a different jurisdiction because you're talking about local policemen.
Yeah. No, the Texas state troopers.
Oh yeah, definitely, because it's a state highway.
Yeah, and they love doing it.
Yeah. It's so easy to drive so fast out there.
Yeah, I mean it is so.
How do you go? What's the temperature? What's the speed limit?
It's 70, but that's just
70. That's not very much.
I feel contained. I feel like they're holding me back.
It just seems like you'd be sitting there forever.
I feel like I should be able to go 90 as long as it's safe, like the Autobahn.
Yeah, why not?
No.
It's like you're no lady or something if you're driving 70 miles an hour.
I know. I feel that way.
Man, I try to go 10 miles over the speed limit.
I'll try to go 5.
Yeah, I probably do 20. I'm really bad. I go 80, 90 miles an hour anywhere I go. But if there's some cops that may be, or if it's on some hills, I'll say, okay, let's go 10.
Yeah.
I got to put it on cruise because if I don't, man, I've got a pretty heavy foot.
I got a heavy foot also.
Yeah.
But I'm telling you, those state troopers out there on my drive, they're for real. So they got me a little bit. They keep me in check.
Do they really?
Yeah.
When's the last time you got pulled over?
Oh, in America?
Yeah.
I mean, 15 years ago.
Really long time ago. But you lived in Kenya for a long time.
Yeah.
Did you have cars over there?
Yeah.
Did you drive cars?
Yeah.
Do all that?
Get pulled over all the time.
Really?
But not from the back. The police stand on the road.
Stay on the road?
Yeah. Stand in front, and then they tell you to pull over like that.
Really?
Yeah.
How big was the town that you were in over there?
Mombasa is the second largest city in Kenya. I don't even know the population. I'd have to look it up.
A lot. I mean, Dallas size, or
oh no,
McKinney size, or maybe something out further.
It's kind of hard to. I could Google it, but
yeah,
it's like more like Fort Worth.
Yeah.
Smaller.
Okay. Smaller, but there's still metropolitan area.
Mm-hmm. It's metropolitan, and it has the port too. So the port is the largest East African port. You know, along the East African coastline, you come down from Somalia, you know, through the Middle East, and they bring the ships down. The cargo ships come down the coast. So a lot of them will port in the Mombasa port as they're heading maybe down to South Africa.
Well,
yeah. So cool. a lot of big industry.
And they have cops
through there. Oh yeah, but it's not the same. When you're pulled over, you're pulling over to pay a bribe.
Oh, really?
Yeah.
Wow. Do you keep a little extra cash in?
Always.
First.
Always.
What?
First, you play dumb tourist.
Yeah.
And then if that doesn't work, then you pay.
You know,
Yeah.
I got $40 here, and
Yeah,
I
yeah.
just,
Yeah, it's
just
like it's usually like 20, 30,
please
20
give me,
bucks.
please give me a ticket. Oh, can I just go ahead and pay it now?
Well, you
Is that
basically say, yeah, you'd ask, oh, can I give you the money and you take care of it for me?
There you go.
And
Yeah.
then
It's not a
that's-
bribe if they're
It's
doing
not a
that.
bribe.
They're not
helping
pocketing
me
their
out.
money.
They're helping me out.
They're not
All
pocketing their
of
money.
Kenya.
They're yeah.
We all
Wow.
feel the same about the police, so
Unbelievable.
it's not no secret.
Well, I'm glad you moved over here or
Move back. Yeah.
here to the States. You have a son that goes to Grand Canyon.
Mm-hmm.
So you think, okay, colleges for sure. You want them to go to college here.
Yeah.
I mean, a lot of even Hong Kong families that I know send their kids over here for schooling, universities and everything. Just so much better here. What would the situation have been if he would have stayed in Kenya?
Oh man, I mean, he wouldn't have probably gone to school in Kenya. He maybe would have lived in like Europe, you know, somewhere in Europe or something. But really, the options are to come to the U.S.
There's so many universities here.
Oh my gosh, there are so many.
Yeah.
It's crazy.
Yeah.
It's unbelievable how many universities we have in the U.S.
Yeah.
And schooling options in general.
But we looked at. I mean, it was like if you don't play D1 volleyball in the United States. I mean, I forget how many there are, but it's not like there's like 50 or so. No, there's like hundreds.
Yeah.
If you like D1 volleyball, I mean, it's like there's not like it's not like one school or a dozen. There is in D2 or D3. I mean, you can go through and get. I know somebody. Matter of fact, because of the Title IX, they have to give scholarships to even women, or they even up for women. And she had hardly ever played golf before.
Yeah.
At like 2 years, she started playing golf, and she got a scholarship to a school that had a scholarship available. She really wasn't that good. I mean, she really wasn't. I'm not saying anything bad about her. I'm not going to tell you her name, but I'm just saying that But because they had the scholarships available, man, she got a free ride, which is pretty cool.
Yeah, there are actually a lot of scholarships, I think. I mean, there's a lot of opportunity in the U.S. and the U.S. is so big. I mean, people that live here think America is like a country, and it is, but it's the size of a continent. It's huge.
Yeah.
So many people from around the world, like the country they live in is the size of a state.
Yeah.
You know what I mean? We just have like.
Just think California, Montana, Rhode Island, Maine.
Yeah.
Wisconsin, New York. I mean, there's
50
literally
it's huge.
Yeah.
It's just a huge amount of, just a huge amount of everything.
Yeah.
It's just amazing. It's an amazing country, actually.
What was some of the biggest things that you liked or did in 2025 that you're most proud of?
Oh, working at King.
Oh well, I set you up for that one.
That wasn't even that wasn't scripted. No, definitely. Oh yeah, it's just been a great year. I mean, a year of transition and change, for our family coming back here. A lot of new starts and some goodbyes, and but definitely just the transition to come back to the US has been really amazing and very positive, and starting at King has been just an incredible opportunity. And seeing my kids, kind of make new friendships and relationships, and feel what it's like to be Americans.
You have 3 kids, 2 boys and a girl. The oldest is going to Grand Canyon University. The other 2
are in high school, McKinney High.
McKinney High School.
Yeah.
Okay.
Yeah, that's been
just McKinney High School, or is there another East McKinney?
No,
West, South,
that's
North?
the original McKinney High.
They're going to that one.
Yes, and then there's 2 other high schools in McKinney, North and Boyd, I think.
Yeah. Okay. Yeah, that's right.
Yeah.
Okay.
Yeah.
And they're okay.
Oh, they're doing great.
Junior and freshman or something, or
yes, sophomore and junior.
Sophomore and junior. Okay. And they just blended in. Everything's fine.
Yeah, I mean, they tell me a lot of stories.
Yeah.
2,600 kids in public school. Wow. Yeah, it's a lot. But they're really enjoying it. They were in private schools most of their life, in international private schools, and they did that whole thing, and they really wanted to go to a public school, which kind of freaked me out, but that's what they wanted. They didn't want to wear uniforms anymore.
Right. Well, that's good. And they won't. And McKinney High.
Yeah, no more colored shirts. And
a great school. I mean, a great school.
It is a
great
school.
time.
Yeah.
And we appreciate you coming to King Operating. We met from one of my coaches that I use. CEO coaches that I use, David Boyette. Hello, David. David, you and your family. Appreciate you, Kathy. And we met because with David, if you will, and then you left and went back to Kenya. You're on a flight. I think you just flown over or something.
Yeah, we just came for a visit.
Yeah, came for a visit. Your mom and David were very close. We lived close to each other, and so you came over and introduced, and you worked for a missionary.
Yeah. Yep.
Missionary in Kenya.
Yeah.
Missionary
organization. Somebody is still running it. So we did that for 14 years. We had a missions organization and did so many different programs with churches and youth and small business development, leadership, and I did a lot with young women, and it was wonderful. And then ran an animal welfare organization the last 2 years, so kind of a diverse animal welfare organization.
Oh, okay.
For the last
animal welfare.
Yeah.
Okay. Yeah, I know you have a fondness for animals.
I do, and that was another project that came up in the midst of all of that. And I've always loved animals and building. I like to build things, and So
what do you like to build?
Well, I like to build business, organizations, systems, people. Just I don't know. I like building things that last and build impact. Really, I would say I like to build impact.
Impact.
Yeah, impact. So whether that's
impact to people's lives.
Better
for show something better, or have people that are feeling better about themselves, or
create things that create opportunity.
Yeah.
I like to build things that create opportunity, things that.
Is that what you did in Kenya? What'd you do? What?
Yeah.
This whole time in Kenya, what was the biggest thing you did over there?
So I would say that a program that was really successful was a program for young women from the ages of 13, really 12 to 13, up to 25. And that program was just to bring in women from underserved areas, underprivileged areas, and start with teaching them about basics. All the basics could be how to go to a job interview, how to take care of yourself physically, how to report. A lot of girls there encounter, rape and, types of sexual abuse. So how to report abuse. So literally all facets of like body, soul, and spirit, and then professional development as well. So the professional development was for the older girls, and the younger girls might be just like helping them stay in school. And then of course there's scholarships awarded to girls that maybe need extra help with going to school, or opportunities that they might have, helping them find jobs. So there was about 3,000 girls in that program.
3,000.
Mm-hmm.
Did you start from scratch in 3,000?
Yeah, and with another woman there, a Kenyan lady there, with the Kenyan church there. Yeah, in partnership with them.
I was going to ask you, how many people do you think you helped? But man.
Oh, over the years, thousands and thousands of people.
Wow. So you affected that many people while you're over there. Man, that's got to be a great feeling.
Yeah, and then did a lot of different conferences in the same. Everything was related to, encompassing Christ, but in Uganda, did a huge conference there with a church from the U.S. that also partnered with that and taught leadership development skills for the weekend, as well as like the teaching and the ministry part of that. So just working with college age students to we did like mock job interviews. So helping them practice how to do that, how to put together like a CV and a resume, and just foundations of growth. And it was really amazing. At the end, there was this huge white chalkboard behind us. I actually have a picture of it. And I asked all of them to put on the board one thing they wanted to see happen in their life. And it was filled, but some of the things it was filled with was just amazing. Like, I would like to get a driver's license. You know what I mean?
Yeah.
I would like to be able to get a passport.
So many things we take for granted over here.
Mm-hmm. Yeah.
Whatever. It's like this. Yeah. It's like the biggest goal in their life is something they really want to accomplish.
Mm-hmm.
Wow.
So
that's unbelievable.
Yeah. So just
what do you miss the most?
Oh man.
About not being here. How long have you been here?
I've been back here since July.
July. 6 months. So what?
I would say, probably the thing I miss the most is just the culture and the people of Kenya and East Africa. It's a very warm and welcoming culture. It doesn't have the political tension that you would find in the US. It's very relaxed. It's very we lived on the coast. It's just a really fun vibe with everybody.
Yeah.
And yeah, everybody is just very warm and welcoming.
We said Christmas Eve, everybody goes out.
Everybody was out on Christmas. Yeah.
Yeah.
Everybody is out on Christmas and looking for something to do. And yeah, so it's really fun. And it's just
Is the weather warm over there all the time? Or?
Well, Kenya is a really diverse climate. You have Mount Kenya, and Mount Kenya is very cold. You get snow in Mount Kenya. And then you have, where we lived, which is like tropical arid climate on the coast. And then you have the highlands that get a lot of cool weather and rain for like tea and agriculture. So it's pretty diverse depending on where you're at in Kenya.
Yeah. What will be the temperature this most Christmases would I guess they have Christmas, right?
Oh yeah.
They believe in Christ. They believe in Jesus
Kenya
Christ.
is a very strong Christian country.
Yeah. Is it really?
Mm-hmm.
That's great.
Yeah. Kenya is a very strong Christian country.
I heard Japan wasn't. Have you heard that?
Yeah, Japan is not. I think there's like 1% of Christians in Japan.
Man, that's such a great opportunity over there. We got to go over there and start preaching the Lord.
Yeah.
Can you imagine?
Yeah.
I mean, it's like the guy that said, well, there's a guy that walked over to this place and he said, man, nobody here has any tennis shoes.
Yeah.
Nobody wears tennis shoes. And the other guy goes, what an opportunity.
Yeah.
And the other guy goes, well, we're not going to sell tennis shoes. Nobody buys them.
Yeah.
And I'm like, man, I'm like the same way. I'm like, man, go to Japan, start preaching the Bible.
Yeah.
You may not live, but if you did live, what an opportunity.
I think in Japan you're gonna live now.
Yeah.
Back in the day, I think they were.
What do they believe in? Do you have any idea on this?
I think they're Buddhists.
Are they?
Yeah, Buddhist, or they're either majority Buddhist or I think almost agnostic, like atheistic. They don't really believe. Some of the younger generation, I think, don't really believe much of anything at this point.
They think that the heaven and earth just came just
I don't know.
created by itself.
Probably try and look at science.
Yeah.
Which is crazy because I feel like if you look at science, it like has all the indicators of a creator.
Yeah.
I mean, it's just like in your face, like that there's a creator. Yeah. It almost takes more faith to be an atheist because you have to really believe against so much proof of life, so much proof of a creator, so much proof of what is, found everywhere you look. That
right.
Even I saw something the other day about how perfectly positioned the earth is from the sun. Like it's perfect. It's literally like, how could that be an accident?
Yeah. Yeah.
Just a little farther off and we freeze or we burn. It's like we freeze or we burn. So
yeah, exactly.
It's very just ornate.
And we're not. We're obviously we're here, and it's a great thing.
Yeah, absolutely. So
and I felt like I was going to burn right the day before Christmas because I played golf and I had to put on sunscreen. But other than that, I mean.
Oh yeah, we had a nice hot summer. It was like Kenya.
Yeah.
A little bit like Kenya.
Wow.
Well, Mombasa, I should say, yes. So in Mombasa at Christmas is usually about 90.
Really?
It's really hot.
Wow.
Christmas is hot.
But you're on the southern hemisphere.
Yeah.
Well, the toilets go the other way.
Well, if you go to the equator, where I used to live was right on the equator, and you can't actually do that experiment. Like you go on the side and the water goes this way, and you go on the side and the water. Yeah.
I'll be darned.
That's
real. I know that for sure.
It's real.
No, I thought I was just somebody pulling my leg.
No,
anyway, so let's go back to this. So most Japanese people just think that this earth, heaven and earth, is created on its own. All the animals and all that. They just think that it just showed up one day or something. Is that what they think?
Well, yeah. I mean, I am not an expert on the Japanese, culture themselves, and I haven't looked up exactly what they believe in and what they don't believe in at this point. But I think a lot of, from what I understand, either they are Buddhist or they don't really believe in a lot. From the last I looked at it, but I haven't looked at it in a while.
I know my Asian mother-in-law who's passed.
Oh yeah.
But she was very religious.
Yeah.
A lot of Asian people.
Mm-hmm.
But Japanese are Asian. Asian,
it's just
Japanese.
Very different. I think it's a very different culture.
You think it is?
Yeah,
Japanese
it's a
or
very
Chinese?
different culture. Yeah.
Yeah, obviously.
I think some of them, yeah. I mean, depending on where you're at, like Thai people, Laos people,
yeah,
Malaysian. Vietnamese. I think they still have some of the smallest numbers of Christianity except Korea. South Korea is the dominant Christian nation. They send out, I think, second most missionaries around the world.
Oh, really?
Mhm.
Wow. Nice.
Yeah.
Very nice.
There's a lot in Kenya.
Hmm.
A lot
Wow.
of Koreans.
Yeah. Oh, is that
A
right?
lot of Korean missionaries in Africa.
Huh. Wow.
Oh.
Wow. What else have you thought about being back, and anything in particular you thought about missing the most, or something that you wish you had? What was the food like over there? Was the food a lot different over there than it is here?
Oh, yeah.
Yeah.
It's very different. But they have a lot of, it depends on where you're at, of course. If you're in Nairobi, which is our capital city, you can get almost anything. You can eat any type of food almost now.
Cheeseburger?
Yes. Oh, yeah. Lots of cheeseburgers in Kenya.
That's what I'm missing,
Yeah.
right? When I go overseas
Cheeseburgers.
somewhere, I just can't wait to get back, because
Yeah.
you can't find cheeseburgers. So,
Yeah. And I mean, now we have, living over there for like 14 years, you see a lot of change, especially through this last era. I mean, now they have, KFC, Pizza Hut, Cold Stone ice cream.
Oh, wow. Wow.
Yeah, we have malls. Nairobi has like everything.
Wow.
It's the largest business hub in sub-Saharan Africa. So anybody who's going to do business in sub-Saharan Africa is going to have some sort of spot in Nairobi. And that means that there's just lots of development, and there's been so much change.
Yeah.
And then,
Yeah.
you can drive out a few hours to the village, and it's, it's still like mud huts and tin roofs and tea fields. So you have very different worlds within Kenya.
Yeah.
Very different worlds.
Yeah.
Yeah.
Interesting. I guess when you go over there for so long, you got to get used to it.
Yes, you do very much get used to a lot of things.
My grandfather always said that you can get used to anything but hanging. You can't get used to hanging, but you can get used to anything. Especially if you're over there for so long and you're like,
yeah.
Hey, man, you ready?
No, you really do. I
Yeah.
mean, I think about the things I got used to, and I'm like, wow, that's really crazy. I mean, like electricity. Like, I love working in energy. I mean, we work in energy, right? And that's what we do.
Mm-hmm.
At King, we help create energy for the United States, and that's so valuable to me because I know what it is like to live without energy. I mean, the power outages. I mean, there was a time for the first few years, the place that we lived, it was just like the power was out every day. Every day you knew the power was going to be out.
For an hour or 2 hours?
Oh, I wish. 4 or 5.
Really?
Yeah.
Wow.
Yeah.
Unbelievable.
So then you have to get your generator, then you need fuel for it to go get your gasoline and put it in. And yeah, so I just appreciate the opportunity to create energy.
Yeah.
Really amazing.
Wow.
For us and for, the world needs energy. It changes the statistics when you look at, developing nations. Really, energy and oil and gas created developed nations.
Yeah.
Which is the foundation of how we became who we are, and developed nations struggle to have access to energy, which impacts even infant mortality rate by 50%, I think, because if you don't have hospitals that can actually have power, they don't have access to, hot water and lights and all these. I mean, it really impacts a nation drastically.
Yeah, yeah. Well, George W. Bush said in his 2016, I believe, State of the Union address, we have an addiction.
Yeah.
An addiction to oil. I mean, it's we got to have it. We need 20 million barrels a day. 20 million barrels a day is what we need.
Mm-hmm.
And that's just because, because of driving or asphalt or plastics or all the other things that are associated with oil. It's unbelievable. We have an addiction. We need it. We got to have it.
Oh, yeah.
And matter of fact, that demand continues to go up, which is pretty crazy. Let's go to our word of the week. And the word of the week this week is deliver. And I chose that because it sounded good from Laura. But the second reason why is because it means follow through. It's execution. It's doing what you said you'd do, especially when it's hard, uncomfortable, or unnoticed. I mean, how many times have you been out of your comfort zone here lately? Coming back and going,
oh, yeah.
Oh, my gosh.
Yeah.
What is this place? This is America. It's like, it's so different, and you got to come back and deliver. But you deliver. I mean, you are one that definitely does deliver. And you not only shown that to people in Kenya, but you've also shown it here at King. So we definitely appreciate that. What do you think when I say, hey, I like the word deliver? What do you think of?
Oh yeah, I mean, I love it. I mean, I think that life is going to give you so many opportunities to grow and change and step out of your comfort zone. And all of us who have done anything in life have stumbled along the way. You know, you're learning something, you're trying to figure it out. But at the end of the day, if you have resolve and you have grit, you're going to deliver.
Yeah.
You're going to get up, no matter how many times you fall down or how many times you're like, oh, why did I do that? Why did I say that? And you're going to get up and you're going to deliver.
Yeah.
You know, that's.
You fall down 18 times, you get up 19.
You get up. That's right. Just, you got to keep going.
Oh my gosh.
The point is just got to keep going.
I know. Just, hey, we're not going to say no for an answer.
No, yeah.
It's going to happen.
Yep.
There's no question about it. We do the same thing here. So, all right. I like the Bible verse of the week. 2 Samuel 22:2. The Lord is my rock, my fortress, and my deliverer. So a powerful reminder as we finish one year and step into the next. Strength, protection, and deliverance don't come from luck. They come from faith and trust. So I love that. I think that's really, really good. We're talking about books for the year. And, you know, there's a book that I'd recommend that says The Surprisingly Simple Truth Behind Extraordinary Results by Gary Keller and Jay Papapson. As the year wraps up, this one's a reminder that delivering result isn't about doing everything. It's about doing the right thing consistently. And that's one thing I know I've really followed up on since you've been here at King and you're growing and helping a lot of people out, is because you keep it simple. You do definitely keep it simple, and you do it over and over again just by finding those partners that reach out and say, hey, I'm interested. I have a problem. I need monthly income, or I don't want to pay as much in taxes, or I need to put some money to work and I'm not getting the return I want because the banks still aren't paying very much.
Yep.
We can talk about it all day long, but that's one thing that I know that is really good about you, because I know you the results, and you love those results and you talk about the results. So I thought that was really, really good. And I'll say that, we watched, I don't think I've ever mentioned Reacher on Amazon Prime. Have you ever watched Reacher?
Yeah.
What a big guy that dude is.
Yeah, he's a huge guy.
Man, I read the books before, and thinking about this guy, and I'm like, are they going to get to play him? And they did, and it's really good. But Reacher on Amazon Prime, this is all about follow through, say less, do more, deliver when it counts. I thought that was really, really good. But the unstoppable listening to right now is this one hit when you're closing a year strong and setting the tone for the next one. Unstoppable with Kerwin Ray. That's the podcast or something that I'm listening to right now, and I love these because it's really what goes into your mind is what's going to come out, right? And we've always said that, and I don't know how much the younger generation thinks about what's going on and why do you do the things that you do? Why are we the best? Why do we try to be the best? Why do we want to make sure that we're not making mistakes? Well, we listen to things that tell us, hey, here's the path. It is so hard to be successful. It is not easy.
Yeah.
It's not easy. And I mean, you could fail all day long. You could fail all day long. One of our preachers said the other day, he said, before you speak, before you know where I'm going with this, before you speak, before you act, before you do all these different things, just think, okay, is this what the Lord wants me to do? Because if you do that, if you follow that, when you're listening to something or you're watching something, you have a choice. And I love the choices that we make. My goal in 2026 is to help more people make better choices. I want to be a sounding board, and I want to help people make a better choice about what they're listening to, because what goes in your mind is what's going to come out. That's what all Zig Ziglar talked about. For years and years, I listened to Zig Ziglar. He said, whatever goes into your mind, whatever you think, and whatever, positivity, all the different things, the W. Clement Stones, the people that say, you are what you act like, you are who you are. because of what's going on in your mind.
Yep.
So
Loves it.
I think that's a great saying. I think it's something that, we want to in 2025 and closing up here. We've had some great successes at King Operating. We brought on some great people, like Rachel, and we're getting better every day. But you know what? The best thing to do is to think about yourself and think about what kind of person do you want to be? What do I want to be? What does Rachel want to be? What does she want to be at the end of next year? We're sitting here next year, we're going to say the same thing. What is it that we did want to accomplish this year? What is it that we did? What did we not do? What gets measured gets done. Harvey Mackey wrote that quote. It's a great quote. What gets measured gets done. And if I want to run 1,000 miles, which I've done twice, I'm going to do it this year. But if I run 1,000 miles, I want to get skinny, right? Hey, if you want to get skinny, run 1,000 miles. It's going to help. I guarantee you. But it's like what gets measured gets done. So when you're thinking about your goals for 2026, what is it that you can think about? What is it that you can, dig down in your brain and say, you know what? This is what I want. At the end of next year, I want to be happy. What does happiness mean to you? Well, it means that I made this much money, or I made this much difference in people's lives. We've done this for our investors. We want to make sure that we achieve that dream for the investor. What does the investor want? What is if they want taxes or monthly income? Some people just love monthly revenue checks. It doesn't matter really.
Income.
They love them, and they'll sign the back of them. They don't want the ACAs. They want to sign the back of it. They want to go to the bank, and they want to put that check in the bank. They love that. That's what we do at King Operating. But it's like we want to make sure, and we want to make those checks bigger. We want to do the things necessary for success in our funds because we want our investors to make money, because we want to make sure we're smart enough that we, back here in the back, we have some great assets. We have a great team of people. And all it takes from that point, there's this, that's the there's a three-legged stool here,
Yep.
Rachel, and we've talked about this a lot.
Yep.
Is you have assets. What kind of assets do you have that you can achieve these kind of returns?
Mm-hmm.
You have the people it's going to take that know how to drill wells.
Mm-hmm.
I'm not going to take you out there and go, okay, Rachel, what do I do?
Dang it.
Yeah, I know. Maybe a dream of
I
yours.
wanted the stick.
The stick, yeah,
What's
exactly.
it called?
The water witcher stick. The geology, yeah, don't do that.
Yeah, we got some better.
We have better tools
than that.
Yeah, better tools than that. So we want to make sure that the clients, with the geologists and the landmen and the engineers and all the people necessary to make the best product for you as the investor. So all we need from that is we need the strategy. What's the financial strategy that we're going to implement so we can do the best thing for the investors? Because we want them to not only make money, we want them to reinvest and tell their friends about us. So how do you do that? Well, you have a great team of people, you have great assets, and you have a great strategy. I write about that in the book, The Upside of Oil and Gas Investing, which I'm going to do a second version. Next year, one of my goals in 2026 is to do another version, another edition. Things have changed.
That's right.
We got to go with the flow.
That's right.
So we got to rewrite that. So, man, I'm looking forward to 2026. Anything in particular that you're looking forward to in 2026?
I'm just really excited for this year. I mean, I'm always excited because, as the scripture said, I mean, we're not just going into this year wishing or hoping. We're going in with faith and expectancy and believing that, with God, all things are possible. With Him, with Christ, all things are possible. So I'm excited to continue to keep learning and growing and helping people. I mean, now we help people in a different way, but, working with investors and just making an impact for people and continuing to be a light hopefully a light wherever I go. And I'm just looking forward to all that's before us.
Yeah.
It's going to be good.
Oh, great.
It's going to be really good. I'm going to go to my first oil well.
Yeah, you are. Exactly.
Yeah.
We're going to go out there. Don't go in January, February. It's going to be cold.
No, I need to go when it's warmer.
Yeah. But, hey, we're drilling right now, and we're going to have a second rig up there. We'll have 2 rigs running in the Panhandle soon. But right now, I mean, it does get cold, and that wind comes off. It's okay if you prepare for it, and if you're ready for it.
No, I got to get a little warmer.
All right.
I need a little warmer.
It may be March, April, something like that out there, but I was
Going
out there
to have our landman extravaganza
Yeah.
at Bimins.
We do. Absolutely. We got to figure out what it is. Yeah, I like it.
I like it.
I like it.
We're planning it.
All right. Well, Rachel, Merry Christmas, Happy New Year.
Absolutely.
To you.
Thank you so much.
Look forward. Will you come on the show in 2026?
Absolutely. Absolutely. I'm
Hang on.
over there.
Good. Well, thanks everybody. Appreciate it. The Jay Young Show is concluded for 2025.
Woo.
And be sure to subscribe and ask me questions about Landman or ask me questions about other things that we can answer. We'd love to answer your questions for you. If I don't know them, I guarantee there's some guys across the hall, all across that back hall that know how to answer good oil and gas questions. So please be sure to don't go any further, any longer without knowing the answer.
That's right. We got them.
Well, great. Happy New Year, everybody, and see you back here next year.
Bye.
Thank you.